and welcome back to yet another exciting week of the Lazy Money Game. In this week's episode, I will start by addressing what is Tina, and perhaps some of you are sitting and thinking, well, you mean who is Tina? But you will get the answer to that question very soon. Next, I will give an update to my portfolio, and finally, I will answer a question which I have received from the audience as well. So let's start by addressing the question, what is Tina? So Tina is an abbreviation for there is no alternative. And how is that notion used? So currently, the stock market is priced really high from a historical standpoint. And if you were to put your money in bonds instead of in the stock market, then in a lot of countries, you know that you will for sure have to pay a negative interest rate on that investment. Hence, a lot of investors are using the notion there is no alternative to placing your money in the stock market, simply because it's not desirable for you to know that you will have a guaranteed loss. Then you are perhaps willing to take more risk in order to at least have the possibility to make some money. If we then turn to my portfolio, then the first thing you immediately notice is that there's a green circle for this week's episode, meaning that the portfolio is up in value compared to last week. If you go to the portfolio values tab here, you can see that the portfolio has increased by $1,500 compared to last week, and at the same time that the cost has stayed the same, meaning that I have not done any new investments. So this means that I still have more than $12,000 in cash ready to be invested. If we then continue to my favorites tab, namely the dividends tab, then you can see that I have received a little more than $120 within this week, and all of that came from Unum Group. So far I have received a little more than $485 within this month. So I'm still really well on track to receive more than $1,000 within Q3. And just as a quick note here, if we go back to the overview arc, perhaps if you were looking at Unum Group, you would say, didn't you expect to receive $210 and then minus the withholding tax? Well, the last purchase I did of Unum was after the ex-dividend date, and that is why the amount of dividends that I received is actually not higher than the $127.50. If we then go back to the dividend sheet here, since I have received some questions regarding my estimated yearly income that it seemed a little too high. Well, let me try to explain that this is just a very simplified estimate. So what I have done is I have simply summed all the annual income for all the stocks that I have, and then I have multiplied by 0.85, meaning that I have deducted the 15% withholding tax. And this is if I held all my stocks for a full year. But since I continue to buy stocks on a regular basis, that means that I will buy stocks after the first ex-dividend day, or the second, or the third, or even the fourth, meaning that this number will always be higher than what I will actually receive within this year. So you could look at this number and say, this is the expected income for 2022 if I didn't buy any additional stocks into the portfolio. If we then go back to the overview here, then naturally you have the performance of the entire portfolio, but if you want to have it on a more granular level, then if I scroll to the top here, then you can see how each individual stock has performed within this week. So you can just pause the video if you want to have a closer look at that. If we then turn to questions from the audience, then I have received a question that goes like this. Hey LMG, I have been looking through various companies by following your guidelines, and I have found that AT&T seems to be attractively priced. I can see that you no longer have that company in your portfolio, so how do you feel about the company today? So first of all, thank you very much for that excellent question. Let me first of all start by saying that I haven't been following this company since I sold them back in February this year. But if we are to turn to the guidelines, just to see if the company is actually obeying the guidelines or are in line with them, well, clearly the first one, a yield above 3%, since if you are buying AT&T today, you get a yield way above 7%. If you then look to the dividend forward yield, then it indicates that perhaps is now not the worst time to buy, since you're buying at a pretty high yield compared to the 4-year historical average. Then the third one, the PE ratio is still lower or in line with its peers. The PE ratio is definitely less than the 75%, at least according to Seeking Alpha. Well, diversifying across sectors, that depends on the portfolio that you have. So obviously you need to look to your own portfolio to see if that is true or not. And then for the 6th point here, there is an absolutely amazing dividend history with AT&T, and that is why a lot of dividend investors has invested into this company, since it has paid out an increasing dividend for more than 30 years in a row. But if you look closer at number 7 here, strong company potential and a good moat, this is where we really need to pay close attention this time when we are looking into the stock. So if we go back to Seeking Alpha here, since I have sold the stock, we have seen that the stock price has both dropped and increased. But what I'm wondering is what happened here in May, since we have seen a drop of more than 10% within a week. So I would expect to be able to find some news item if I Google just a little. And lo and behold, if you do that, you are able to find an article here that AT&T stock is a minefield until the potential dividend cut. I will of course leave a link in the description for this article so you can go and read it for yourself. But basically what this article says is that AT&T has announced that they will be doing a spin-off, meaning that they will be splitting the company into smaller pieces, and when that happens, you should expect to receive a dividend cut on your current shares. How much has still not been decided, and how many shares in the newly formed company you will receive has also not been decided. So one thing you really need to remember here is, if a lot of investors are in AT&T for the ever-growing dividend, then chances are that you would see the stock drop significantly in value, because as a dividend investor, if there's one thing you do not like to see, it is that the dividend is being cut. So in the article, the author here lists some different scenarios if the dividend is cut to around 4% or if it's cut to around 5%, and what that will mean for the price of the stock. So if the dividend is cut down to around 5%, if you expect to receive around 5% in dividend from the stock, well, then the stock could theoretically drop all the way to around $22. So let me try and go back here into Seeking Alpha. If you go to the dividends tab and then the dividend yield and then scroll down here to dividend yield, currently they pay 7.67% in dividend if you were to buy today. But after the dividend cut, if you expect to have a dividend around 4 or 5%, well, then you actually have to go all the way back here to 2017, and then all of a sudden the valuation doesn't look that attractive based on a dividend yield. If you are to look at guideline number 2 saying that you are buying at the top range of dividends within the 4-year history that you can look at. So simply just based on that, it will actually not follow criteria number 2 if the dividend cut of around 50% materializes. So when you're looking through guideline number 1 to 6, it typically is quite fast to see if something could be worth spending more time on. And when you then look at guideline number 7, where you actually have to look closer into the company and start to do your research, that is where you will discover such a thing as the article which I have just discovered, that it has been announced that they are going to cut the dividend. So what looked to be an attractive valuation purely based on the dividend yield here, well, if I have to cut the dividend for around 50%, well, then all of a sudden I'm looking to buy at the lowest dividend yield which I have seen for the last 4 years. So perhaps this is actually not a bargain price anymore. And this is still, of course, purely looking at the dividend. I mean, if you are to buy stocks in an individual business, then you actually want to know how the business is performing, because besides the dividend, you of course should care about total returns, and perhaps you should actually pay more attention to total returns than just dividend, meaning how much do you expect the stock to increase or decrease over time as well. So let's try to look a little closer into how AT&T has actually been performing over the last years. If we then turn to macro trends and just take a look at the revenues, for instance, well, then we can see here that the revenues has been increasing, but at the same time we can see that they decreased between 16 and 17, and we also saw the same trend here from 19 to 20, that we saw decreasing revenues. So how well has this business actually been performing if we were to calculate an average increase of the revenue? So to illustrate my calculation here, I have simply pasted the revenues for the last decade of AT&T, and what I have done here is I have taken the increase which we saw in the revenue percentage wise, so you can see that between 11 and 12 that the revenues increased by a little more than half a percentage point, and between 12 and 13 it grew by a little more than 1 percentage point, and between 14 and 15 we had a really excellent year where we saw a growth of more than 10%. Then we had some bad years between 16 and 17 and between 19 and 20. So all these numbers, I simply do an average, and what we end up with is an average growth in the revenue of a little more than 3.5%. So what you need to ask yourself about as an investor is, are you happy with investing in a company which is growing its revenue by around 3.5%, or do you expect it to be able to grow more based on what company plans that they currently have? If we then go back to Seeking Alpha once again under the dividends and then to the dividend growth tab here, well, then you can very clearly see here, if you look at the 3-year compounded average growth rate of the dividend, or the 5-year or the 10-year, that these numbers are well below the growth rate of the revenue in the company. So if you are a long-term investor, that is why the growth rate of the revenue actually matters to me when I'm sitting and investigating the companies which I potentially want to invest in. And this was just to give you a real life example once again with AT&T, saying perhaps I shouldn't expect too much growth in the dividend. And this is something that I need to keep in mind also if I see that they are potentially slashing the dividend with 50%. I mean, if they are capable of growing the dividend around 2% after that, well, then it will for sure take a lot of time before you will get back to that juicy 7.5% dividend again. And one thing to note about my calculation is my data is actually not updated since the end of 2020, so I haven't even looked at the performance within this year of AT&T. So if you want to have newer data, then you need to switch to quarterly reports, and then you have to plug in 4 times as many numbers. So perhaps you're now sitting with the feeling that I'm way too negative on AT&T after I have presented some arguments for why I potentially do not like to invest in AT&T at the moment. Well, then let's flip the coin and show some arguments for why you perhaps want to invest in it. So if we start by turning to open insiders here, I mean, who is the people who is supposed to know most about the company? Obviously, that is the CEO and the directors of the company. And as you can see here, they have been buying stocks in AT&T, and they have actually been buying them at a higher price than what it is currently trading at. So this would actually be a strong argument for why perhaps it would be a good time to invest in AT&T today. So hopefully this answered your question about how I feel towards AT&T as an investment today. I know it's not really clear, and I mean, it's because it's not really clear to me. There's some pretty good arguments for why I don't want to invest in it, but at the same time, when I look to what the insiders are doing, that is also a really strong argument for why you potentially want to invest in it. So that is why I never give investment advice. I simply just try to present the facts as I see them, and then it is up to you to decide whether or not you want to invest in it. So I just show my portfolio and try to show my reasoning behind why I'm doing what I'm doing. So if you enjoy content like this, then please consider leaving a comment down below, or liking the video, or subscribing to the channel. It really helps me out a lot. And until I see you next Sunday, bye.